Bitcoin is trading under $76,000, and this quite may be official bear market confirmation territory here. So let me dive into the charts. Let me show you what I'm looking at, because if this is a new confirmed bear market, we could be looking at another 50% lower in price on Bitcoin, and who knows, on altcoins, maybe even more than that. And that means another bear market, potentially another 12 months lower in price, maybe another bear market, maybe 2 to 3 years before we reach all-time highs again, which would obviously be very, very unpleasant if you just hold spot and if you keep buying the dip and it keeps dipping. So super important. Smash the like button if you like this. Send it to friends. Get it out there, because the charts are warning us right now. So this is the Bitcoin weekly chart. In blue, we have the 50-week moving average. In red, we have the 200-week moving average. You can see we are currently trading at $75,000. Last week's candle that just closed is red and bearish. It went back up to the highs. It dropped on the 50-week moving average, and now we are trading below it. So my confirmation for a bear market is losing this 50-week moving average, but it has to be a weekly close. So within this week, while we're below it now, we have to actually close the week, which means we still have a full 7 days almost to determine where this candle ends up. And if for whatever reason things happen in this week and the markets pump back up and we close above it, then we still don't have the confirmation for a bear market. But if we close below it, even here, below 76,000 or anywhere lower than that at the end of this weekly candle, that is the confirmation I'm looking for, where we get a bear market, and then the strategy at that point becomes, until we reclaim the 50-week moving average with a weekly close back above it, the trend is bearish and we could drop up to another 60% lower. The reason why I'm saying all of this is completely backed up by the data. Okay, so you can see here, this is the weekly chart going back here all the way to the 2017 cycle, and you can see simply the red arrows are where we lost the previous bull markets. Okay, we lost the 50-week moving average, and every time that happened, it's the past 3 times because it's a weekly chart. Okay, so but since 2017, so that's the last 8 years, the last 2 cycles, you can see what has happened. We lost it in 2017 and we dropped to the 200-week moving average. In 2020, even with the COVID sell-off, we dropped to the 200, even a bit below it. In 2021, when we lost it, we dropped to the 200 and even below it. So you can see those drops here. That is what has happened every single time, no exception. And you can see here, this was in 2017, another 60% drop from the point when we lost that 50-week moving average. You can see when we lost it, even in March 2020, it went very, very quick, but it was still a 50% drop from the point of losing it. So that is basically the only case where things were a little bit different. Even though we still had a 50% drop, that's when they stepped in. The rates were cut down to 0, QE, massive money printing, and they saved it and pushed all risk assets back up. But doesn't look like that's the case right now, because with the tariff stuff's going on, the rates are still very high. There's no talks about QE. We're still basically in quantitative tightening. So it's not the same conditions here. We'll see. That's always a possibility. But for now, even with that quick drop and that black swan event, it was still a 50% drop. And you can see here in 2021, when we lost it, we ended up still going 66% lower. So 50 to 60% lower if we lose this 50-week moving average, which we are basically on the verge of doing. We're currently below it. If we get a weekly close below it, even back to the 200-week moving average, which could be initial support, 42% drop. And if we go below it again, I mean, maybe we go to 30,000s, 60%. So that would mean a lot lower on Bitcoin and altcoins that are already so destroyed. What happens to them? Maybe they drop another 50, 60, 70%. Maybe not. It's hard to say. But we can probably make the assumption that if Bitcoin's going to drop, altcoins are probably going to drop further. And then the question remains, if we do enter a new bear market with this confirmation that we're about to get, we'll see. But if let's say we get this confirmation that we are in a new bear market and we're going to drop 50%, the question is going to be, will it be an exception like March 2020 where they step in, they cut rates, they start printing a lot of money, and they save everything and they V-reverse it back up? that's something we can keep in mind. But until we actually get confirmation of policy change and stuff like that, that's off the table. And then the worst case here is just simply a bear market where we drop lower. So in 2017, from June till December, so that's a 6 or 7 month drop. And then before we got back to that level, we were another 2 years later back here in May 2019. The exception here was March 2020, but if we look at the previous cycle also, once we lost that 50-week moving average, that was January of 2022, before we got back to that same level that we lost, it was February 2024. So if this repeats previous cycles, we could be looking at a 50 to 60% drop, right, which could be into the 30,000s, and potentially another 2 years before the price gets back to 75K, which would take us to 2027. Worst case here, we might be looking at a new bear market, like I said, 50 to 60% lower, and potentially another 2 to 3 years before things get interesting, before we see new all-time highs again. We don't yet have that confirmation. We'll only have that in a week from now, which obviously I will make an update then, so make sure you are subscribed to the channel. That's when we get our confirmation. And that's just basically something to keep in mind. Now, it is completely not the end of the world if you are prepared for it. Okay, you have this information and you know what could happen. So if you're in a position where you are not going to get wrecked if this happens, let's just make the assumption, to talk about strategy, make the assumption that it is going to drop to, say, 35,000. It's going to drop another 50%, and it's going to take another 2 years to get back to this level. Well, then you know, number one, you have a choice depending on your situation. Obviously, none of this is financial advice. It's just in theory here. If the market is going to do that drop, and you know for the next 2 or 3 years that's how far it's going to drop, you have the choice. Are you, for your own situation, set up in a way where you're just going to hold on to your Bitcoin and you're just going to ride it out? That's fine. If you don't need the money and you have, let's say, at least a 4-year plan, maybe 5 or 10 years, then there's probably a good chance that it's going to end up higher again. And then you can dollar cost average on the way down. You can start buying at 50, 40, 30,000, add in more risk capital, increase your position size, potentially at a better price than you got in, and then wait for the next 4-year cycle to happen again, and maybe new all-time highs, and you can play it that way. You can also decide, depending on your own situation, of course, your own decision, but maybe you want to get out if we lose that 50-week moving average, and maybe you want to take that chance and be like, okay, well, there's probably a decent chance we're going to drop to the 200-week moving average. Maybe you get out at whatever it's going to be, 75, 72, 70,000, and you start looking at buying back once we get below 50,000. That's also a possible strategy. Obviously, it depends on everyone's situation. You have to factor in taxes if you buy and sell, and if you trade, and all that kind of stuff. So maybe you want to hold, maybe you want to get out, maybe you want a dollar cost average. It all depends. Again, the most important thing is risk management, of course, and that you are prepared for a drawdown like this and potentially another 2, 3, 4 years before we get back to new all-time highs as a worst case scenario. Maybe something changes and by the end of the week everything is back up and we didn't break down. That's okay too, right? But you have to be prepared here for the potential that we are entering maybe a new bear market. So that also means that, do you want to consider your altcoin versus BTC? Right? We know in a bear market that things are terrible for altcoins. Now, this cycle has been really bad for altcoins. Altcoins are already way down, but that doesn't mean they can't drop another 50 or 60 or 70 or 80 or 90%. And usually Bitcoin is the best performer, even though it also drops in a bear market. A lot of the time, if you go back and you backtest this, then switching all your altcoins to Bitcoin once it loses the 50-week moving average is typically better. You have less drawdown, and also with altcoins, there's so much more risk than Bitcoin, because with altcoins, the team can run out of funding, the project can fail, they can get hacked. Sometimes there's these scams where they hack themselves as exit liquidity. So that's also something to consider if we lose this 50-week moving average and you are holding altcoins and meme coins. Keep in mind, look what happened to NFTs this cycle. They didn't really recover from last cycle at all. The same thing could happen to meme coins. What if they're down 90% or more and they just never recover, the majority of them, right? So those are all things you need to consider. If this happens, BTC is still the best place to be in a bear market, outside of cash, of course. But in terms of Bitcoin or altcoins, Bitcoin tends to do best. And then, of course, if you want to make money in a bear market, the only way to really do this is by trading, by shorting the markets, by doing maybe short-term trading, day trading. There will be bounces. As you know, in a downtrend, there will be relief rallies, dead cat bounces, short squeezes, and those can be traded to the upside and also to the downside. So if you know how to trade, that's the way to make money in a bear market, especially if we're going to get a bear market that's going to last 2 or 3 years. You know, just with spot, it's going to be very, very difficult to make money unless you want to try and play the bounces with spot. And that's all also very risky and hard to do because you risk the chance of buying a scam pump and then it dumps and you lose even more money. So technical trading, shorting, even futures is going to be the way to go, especially maybe even consider, if you do trading, not only crypto, but also to look at Forex and stock markets and gold, because if you can trade a chart, it doesn't matter whether it's Bitcoin or whether it's equities or whether it's Forex. So, my opinion, technical trading is going to be the way to go. Once we get this confirmation, you can see we're here at 75,000. It's not looking good. I'll give it until the end of the week for that weekly close as confirmation, but this is what you have to consider, in my opinion. And that's what I'm going to be focusing on much more on the channel, on the updates, in my VIP. Everything is going to be focused more around trading because based on what has happened in last bear markets, that is the only way to make money. And if you can figure out how to trade, if you can learn, you can master that, you can make more risk capital, you feel good. It doesn't really matter about whether your spot positions that you have, they're managed within your risk. If they go down and you're still making money from trading, it doesn't matter because you make more risk capital. You can dollar cost average Bitcoin. You can make money in the bear market, load up at the lows once again. Let's say if Bitcoin does go to 40,000 to 30,000 and that ends up being the bottom, that's where then if you have risk capital available, you can load up and hopefully the next time we go to 200,000, 250,000. So we might still be able to get a 3, 4, 5x on Bitcoin spot if you can load up with a decent amount of risk capital around 30 or 40,000 and have that whole ride up, even if that's only going to happen in 2027, 2028 or later in the next cycle, that's fine. But I just want to share all of this with you here from my experience. You can see here on the charts what happened in the last cycles, and you just don't want to be in a position where you are fully still allocated to spot and you're hoping for a bull market and it just goes down, 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 and it takes another 3 years. Besides the drawdowns and the loss that you'll see in your portfolio, it's also just mentally exhausting holding a long position for 2 or 3 years while and hoping for it to go up while every day it's just going down. And then, of course, as it's going down, the news is going to get worse, where we're going to see things come out of more fraud, maybe exchanges blowing up. Who knows what's going to happen? Someone big is going to blow up. Maybe it's going to be Michael Saylor or MicroStrategy. Who knows, right? But there's going to be bad news on the way down, and it's just going to be horrible if you have only a long position and you're overextended and you're not able to trade or short or make money from the market going down. It's just a really bad place to be in. But like I said, if you're aware of all of this, if you're prepared for it, like I'm laying out here, if we do get that bear market, your risk is managed in your spot, whether you reduced it or consolidated it to Bitcoin or whatever you're doing with your spot, you get out of the markets, whatever. But if you're able to trade and you're just able to make money, as this market's going down, you increase your risk capital, it's going to be amazing, right? Like, let the market drop, because if you're in that position where you are not overexposed, everything is managed, you have risk capital, you're dollar cost averaging, and you can load up when this market capitulates and it gets to its lows, it'll get there. Whether that's now or 6 months from now or 12 months from now, it doesn't matter. Even looking at these charts, if you bought even the 200-week moving average after those bear markets and after those crashes, and you held for 1 or 2 years, you would be making a bunch of money. And if you can repeat this process, that's how you get wealthy. So I hope you enjoyed this. I will do future updates. Make sure to subscribe, smash this like button, share this video with a friend, please, because it could help save them a lot of money. And I will see you in the next video.